Hey everyone, welcome to Financial Revelations. I am David Szafranski, your host. Every week I'm your host. That's never going to change, at least while I'm alive. I've always thought that I'd probably get shot in the back of the head in the parking lot by an angry client, but that hasn't happened yet because most people truly love me. You can see me or look at my posts at SkiBucks1 on Twitter. Every Thursday morning at 8 o'clock, I'm on WCRF in Cleveland. You could use the Moody App to listen to it if you're not in the Cleveland area. Moody Radio is 103.3 WCRF from 8 to 9 a.m. You can always call here, 800-344-2534, and maybe talk to one of us. I do return most of my phone calls, all of my phone calls, really. And, of course, our website for the well digs, we do these well dig missions in Brazil, nativosusa.org, where there's a fundraising GoFundMe. If you just put in Nativos USA or my name into GoFundMe, you'll find it. Any amount helps. We like to take people who can't afford it. So thanks in advance for that. People are donating, and it does make a difference because we like to take people who cannot afford to go. So today I want to talk about a couple of things. We're going to give you a bond market and a rates update, and then we're going to do a couple of listener questions. And I love listener questions because it tells me that people are listening and they are engaging and they want to manage their money well. The most important thing, what I have found is to retire well, to live well, to walk away from the workforce at some point in time, which I don't entirely endorse. But if you wanted to do that, you don't have to be a multimillionaire to do these things. You have to manage your money well, though. You have to have a budget. These 5 pillars of financial planning that we've spoken about here, and one of them is a budget. One of them is an emergency fund. One of them is paying off consumer debt. So if you're doing these 5 pillars of financial planning, you could retire with a nice lifestyle. You're going to have Social Security that's not going away. And one of the things they might do to Social Security is increase the age at which people get full retirement. But that's going to be for people that are not even yet in the workforce. So we have a demographic problem where we're not producing enough kids to cover the amount of people that die. So we're losing workers. It's one of the reasons why they're opening up the southern border to just about anybody who will come here. With 8 million people have come here since the Biden administration took office. That's like almost the population of Ohio. Where'd all these people go? How can we have 4 or 3.7% unemployment when we've brought in 8 million people to work? Are they all working under the table? Where did all the workers go after the pandemic? Where is everybody? Alien abductions? There couldn't be that many alien abductions, could there? If Donald Trump's about to get indicted, or if he says something that is critical of the Biden administration, he will get indicted, or we'll find out about aliens. We'll just never find out about the Epstein client list. That is going to be secret forever. So let's go. So the bond market and the rates update. The 30-year mortgage topped 8% last week and early this week, and that's high. That's going to be prohibitive. I talked to a young person in their 20s, and I said, who would you vote for in the next presidential election? And they said, anybody who's running against the guy who made it impossible for me to buy a house. And I thought, wow, I wonder how many people think that way. Because, I kind of get caught in a bubble here, and I see the things that I see, but it's good to talk to people who are thinking like this, because I do blame the Biden administration for the vast majority of the inflation that we have. It's not always the administration's fault, but this time it definitely is. The 10-year Treasury is hanging out just under 5%. Last week it was Monday morning it hit 5%, went over 5%, pulled back relatively quickly, but it's going back there. It's definitely going to go back to 5% plus. I've heard people saying 6%. If it gets to 5.3%, the next technical level is 6%. Well, that's a long way in the bond market. I'd have to see that personally And money markets, the high yield money markets, are about 5.4% or so. They tend to fluctuate on a daily basis. That's the downside to a money market. If rates are coming down, if you buy a government bond, the rate is fixed, or any bond, the rate is fixed at which you buy it at. And so, but I don't think rates are going down. So in an IRA, if I'm managing qualified money, I'm going to use a money market because it's a little bit higher than the short-term treasury. I like that. In a taxable account, I'm probably going to use a U.S. government bond right now, short-term, because you don't pay state and local tax on that. You pay federal tax, but not state and local tax. So there's a little bit of a taxable advantage there. And depending on the state that you live in, like Hawaii, for instance, has a 12% state tax. California is up there too in the tens. Well, the taxable equivalent is probably pretty close to the money market. So I don't mind that. And we're keeping everything short term still because I think rates are going higher. There's a Fed meeting next week. I don't think they're going to raise next week, but I think they are in December. I think they want to put a little time and distance between what's going on in Israel and the next rate hike. We had a GDP number of 4.9% this morning. Most of the GDP is government oriented. Normally you'd be really happy about this GDP number, and you'd be really happy about the unemployment numbers because they're at 3.7%. Until you just scratch a little bit under the surface, and you see that we're losing private sector full-time employment. Those jobs are falling off. We're gaining part-time employment, private sector. The vast majority of the jobs added are in government employment, and that's not what you want to see. And the vast majority of the GDP is coming from government spending, and that's definitely not what you want to see. You want to see private sector doing this. The Biden administration has spent nearly $7 trillion since they came into office. Of course we're going to have GDP growth when you throw $7 trillion of government money at it. What do you think is going to happen? So the Inflation Reduction Act, which didn't reduce inflation whatsoever, and the Build Back Better disaster, I understand there are times when the government should spend more money. This doesn't escape me, and it's not Keynesian to think this. If you want to know what Keynesian is, it's basically Marxism with a pretty name on it. But Keynesian economics is basically the government spending money to increase output, to drag the economy out of something. The problem is the Keynesians never really got out of Keynesianism. They just keep spending. And that's what we're doing right now. What you want to see is a free market economy that supports itself. And then when there is a pullback in the economy, yes, the government can increase spending a little bit, or maybe a lot for a short period of time, and then they back off of that, kick people out of governments, and then back to the free market, because that's where they're going to make money. That's what really produces jobs and increases productivity. But the government doesn't do those things. We just, in times of need, we spend more, and then when times get better, we spend more again. And this is not the way to grow an economy. It's not the way to keep long-term growth trending upwards, keeping inflation low, employment high. It's just not the way to do this. These people they're trying to import democratic socialism like you see in Europe. That's what we're trying to do right now, and they're doing it. Look at what Europe did with immigration. They basically destroyed their economies. Look at what we're doing. 8 million people. So, for goodness sakes, vote against these people in the election. Please vote against these people. Bernie Moreno is running for Senate against Sherrod Brown. Vote for Bernie Moreno. He's a free market capitalist. He knows about capitalism. He created wealth, sold out of auto dealerships to run in the Senate. I'm voting for him. Questions from listeners. And by the way, you could, if you have a question that you don't want to call, you could always email Corey at epsf.com, all running below me here. This is a question from a listener. How do money managers handle losses? Simply, if you're not willing to take a small loss, you're going to take a large loss. So it's okay to take losses every once in a while. I have never met a money manager that hits it right 100% of the time. That person doesn't exist. Now, there are people that hit it big once or twice, but most money managers take losses. I take losses from time and again, and there's a couple ways to do it. Number one, we're coming up towards the end of the year, and we do this thing called harvest losses. So let's say you have a stock that you like, but it's beat up, it's down. You don't think it's going to go up anytime soon, so you sell it in a taxable account. You sell it, you're allowed to take that loss against gains. That's why we call it harvesting, because we're probably going to sell a gain against it. And then you stay out of that stock or any like stock for 31 days. On the 32nd day, you buy back in. You can still keep the loss, assuming that the stock hasn't moved any higher, or maybe it has a little bit, or maybe it's even moved down. You're getting it about the same price, so you're buying back in. 32nd day later, you can buy back in, and you can keep that loss. So that's one thing that we do. The other thing that we do is sometimes you just take a loss. Sometimes you make a mistake and you buy a dog. Coinbase is a dog that I bought. I didn't buy a lot of it. I thought it would have a greater impact. People do like crypto. I don't like crypto necessarily. You know, it's incidentally, that's how Hamas raised they raised some of their money through crypto. They really raised their money through Iran that this administration gave them. We haven't enforced any oil sanctions since the Bidens have come into office. Iran has made upwards of $70-80 billion with it, but I'm sure they're using that to improve the lives of their citizens, or missiles for Hamas. Which do you think? So anyway, sometimes you just take a loss. It's okay. You're not going to die to take a loss. Just if you are diversified and you're putting some research into your portfolio, most of your stuff is going to win over time. Okay, don't throw a dart at the dartboard. That's not investing, that's gambling. My next investor question is Roth versus a regular IRA. Which do I prefer? And some of this is based on how old you are. So the younger you are, the more I love a Roth IRA. The older you are, I still like it, and I'm going to assume that you have IRAs or you have a qualified plan someplace. So you're in the IRA tax law, so you still could use a Roth. The benefit of a Roth, though, is in time invested, because it's you don't get a tax break on the way in on a Roth. There's no deduction or anything like that. It's taxable money. So you make a contribution to a Roth, it's part of your income, no tax break. But if you follow the rules in a Roth and you meet the conditions, all your growth comes out tax-free. That's really powerful the longer you have it. Look at this, though. We have almost $34 trillion in debt in the government. In a regular IRA, if I'm right, taxes are going up. You lose in a regular IRA because you take a deduction at, let's say, 20%, just picking a number, and taxes go up. You're coming out at 28%. You lost that equation. And I think taxes will have to go up at some point in time to pay for $34 trillion in debt. And they're not, by the way, the Biden administration is not slowing it down. They just projected how much we're going to issue in debt next year to cover expenses. It's going up by 30%. So in a Roth, you pay on the way in, but you pay no taxes on the way out. And I think you're going to win in that equation. I think that's a winner of equation, especially the younger you are. So what's the best way to for the Biden administration to get this through? Is to tax people who aren't even born yet. Tax people who don't vote. Make Social Security longer for your... So if you are in Social Security now, like if you're 45 or you're thinking, well, is it going to be there? Well, yeah, it's going to be there. And you're going to be able to retire with Social Security. But for people who are 5 years old, they're going to make them wait longer to get their full benefit. And some of that makes sense because people are living longer and they're working longer. So some of that does make sense. I'm okay with that. But in a Roth, you come out of that thing, there's no taxes due. So you're going to win that equation. That's where you're going to get your most powerful, your most bang for your buck is in a Roth, especially as they're raising tax rates later on to pay for all this money that the Biden administration is spending now. And we're about to go into an election cycle. You don't think they're going to want to buy votes? We'll see, but that's what I think is going to happen. So I like Roth a lot better. Now, if you're in your 50s or even early 60s and you have qualified money in a 401k or a pension plan of some kind, you could still do a Roth, because if you're 60, 62, 63, odds are you're going to make it to 85. So you have 10, 15 years. If you're still contributing, if you're like, well, where should I do my catch-up provision at? Do that in a Roth. I like that in a Roth. There's no RMD in a Roth either. So you can make that money. You can wait to last money to do, and it's easier for somebody to inherit a Roth IRA because there's no beneficiary IRAs for a Roth. It just comes out. It's tax-free. I'm David Szafranski, a real American, a true red-blooded patriot, and the voice you can trust.